There's so much to just think about with all of that. So do you think, with your analogy of kind of, the UK and America, and now America has a trade deficit, do we enter a world 10 years from today where the US dollar is still around, but there's these other currencies? How the pound was kind of the reserve, what was it, like over 100 years ago now, or 100 years ago or so? Do we enter a world where the US dollar is still around, but there's these other currencies that maybe we're just seeing evolve right now? Like maybe they're stable coins backed by commodities in some way. And instead of having another nation as a reserve currency, or even like the IMF coming in with an SDR as some sort of reserve, do we enter a world where it's like we have these stable coins backed by commodities that are somewhat centralized? Sometimes I look at Tether's gold-backed token. I'm like, is this like a new form of reserve currency that's kind of evolving? I know these are centralized things, but are we headed to that kind of world 10 years from now? What would be your guess?
So my base case throughout the 2020s is that we'll have higher than average inflation compared to the 2010s, driven by just commodity supply limitations, large fiscal spending, that 1-2 punch. And then generally when you have new technologies and sovereign debt crisis, that's when you get shifts in the monetary system, right? So the prior shift was the 70s, the one before that was the 30s and 40s. And so I do think that we're on the verge of kind of another monetary transition. And to your point, one of the arguments I made is that this period is pretty unusual, where we have like one fiat currency at the heart of the whole system. People assume you have to have like, what is the world reserve currency going to be? And it's like, well, this was the anomaly, I would say, that basically after World War II, the United States was like 40% of global GDP.
Yeah, got
and
it. Yeah.
Whereas right now it's down to 20% of global GDP. There's no country big enough to be the world reserve currency alone, and nor do they want to. Nor is there enough geopolitical consensus and power concentration to have a hyperpower that can just dictate terms, right? So I think we're heading in a more multipolar world, which includes a multi-reserve currency world. So you can look at, say, the SDR basket. That's 5 major currencies. They're kind of the reserve currencies, and the United States dollar dominates it. But I think over time it spreads out a little bit. We've already seen that mildly for 20 years. So the US dollar share of global reserves hit a peak about the year 2000, and it's been in a kind of a sideways to mildly down trend. And I think that continues, could accelerate. And I also think there's going to be an increase. Ever since around 2014, there's been an increasing shift towards neutral reserve assets, which currently means gold, meaning that if you look at official central bank holdings of treasuries and gold, both have gone up in dollar terms, but gold, they've been buying gold and their gold's been appreciating. And we see, for example, with this recent event that, treasuries were considered risk-free assets. But if now we see that if you are a country that is belligerent, or a country that is, for whatever reason, not on good terms with the US or Europe, and that can take a variety of forms, right? So right now we're saying, okay, if you do something extreme like war, your reserves could be frozen. But in the future, you have to say, okay, what would future politicians do with reserves, right? Could we freeze the reserves based on trade disputes? Could we freeze them based on commodity disputes in a truly scarce world of commodities? And so countries are saying, okay, well, so if my reserves can be frozen, they're not risk-free, and they're already yielding below the inflation rate, as we just discussed. They're being financially oppressed. They're just melting ice cubes. So what other assets can I put reserves into? So one option is you could go into a couple different currencies. So Russia, for example, had their dollars and euros frozen, but their yuan and their gold is still fine, right? So you can do that. And then 2, you can get into gold. And gold is really the only commodity market big enough to be like a long-term store of value. It's not really big enough. It's, if you do the math on what it would take for China to go to an official, and now some estimates think that China has more gold than they say, but let's just take them at their face value. And they say, okay, they want to get up to a 20% weighting of gold reserves as a percentage of total FX reserves, like Russia has. What would it take? Well, the gold market's not really big enough to absorb that flow without a big price increase. And that's just China. What if every country wants to go, in whatever allocation they have to gold, they want to increase it by 20%? This is not a big enough market. And then you can look at things like Bitcoin, and you say, okay, there's a neutral reserve asset. There's a payment channel that's relatively permissionless. That obviously has interesting geopolitical locations as kind of a reserve asset, but it's a less than $1 trillion asset right now. It's not big enough to absorb that. So I think as we look out further, we are looking more digital. Gold is important now. I think part of it is having it in your own jurisdiction. So no stable coins, no paper claims, but just having it in your own country vaults is important. But for people and for other institutions, I do think that we do have a variety of gold-backed stable coins. I think you can have other commodity-backed stable coins. They're interesting. Obviously, you have fiat-backed stable coins, and then you have bare assets themselves, like Bitcoin. And I think that there's going to be kind of a transition over time. And my general approach is to focus on scarce assets. So I like gold, I like Bitcoin, I like appropriately priced real estate, I like appropriately priced equities, commodities, things like that. And I do think that we're going into a world where reserve practices are more diversified and perhaps more focused on scarce assets, and even things like just higher commodity inventory, strategic commodity reserves, things like that.
Could something like Bitcoin, I'm obviously a lover of Bitcoin. So could something like Bitcoin get big enough just by force? Like doing that, when you hear Greg Foss talk about, hey, there's 200 trillion, 300 trillion in bonds and credit debt. And if some of that money just comes into a world of Bitcoin, can it just be forced to be big enough?
Over time, yeah.
Over time. So it couldn't be something that happens in 24 months.
Well, I would say we're in the process of testing Bitcoin's hardness. So if we go back to gold for a second, right? I mean, if there's 200 trillion in bonds and cash, there's something like 12 trillion in gold, right? So if you were to pour some of that big cup into that smaller cup, gold would have to be much bigger to absorb it. And in the 70s, you had crazy shocks. Like you had gold go from 35 an ounce pegged up to hundreds in a very short period of time. And then it, eventually reached a bubble, and then it stabilized. And then it kind of went this long period where the treasury was the reserve of the system. That started, like we said, that kind of peaked in 2000, which is also roughly when gold bottomed. That was like the UK sold part of their gold at the bottom of their official gold reserves. Then we just, we had this like decade of almost straight up in gold, right? So you can have things like where decades happen in a year, and then for decades nothing happens, right? So I do think that you have these periods of time. You know that quote, like there are weeks where decades happen and decades where nothing happens, or decades where weeks happen. I think gold and these kind of monetary shifts happen like that, where these markets can get big enough if the much larger asset becomes far less desirable, and just money has to keep pouring into those new assets. And so bringing it back to Bitcoin, I think it's we're seeing it's monetizing over time. Right now, it's a 13-year-old asset, right? So we can't just put $1 trillion into it and say, okay, well this is our hardest asset ever. It's our sovereign reserve. This is where we're putting decades of accumulated trade surpluses. We're betting the future of our citizens' like financial lives on this asset.
Yeah.
So
I want that. But what you're saying makes sense. But yes,
yeah,
I hear you.
So we can barely do it with gold, right? So gold is already like, gold's historically been the safest asset you can imagine. But now this question's like, could gold be demonetized by Bitcoin, right? So there's nothing that's risk-free, right? But gold it's got the longest history. It's this super stable stock to flow ratio, closest thing we have to perfect money. And so they have that. Even that market's not big enough. And so as we're seeing Bitcoin monetize and we're testing its hardness in various ways, we're seeing, okay, how does it respond to differences in hard forks? How does it respond to 1,000 altcoins trying to basically denial of service it, or just like distributed attack on it? Can we dilute it with altcoins? Then we're seeing, okay, what if we what if some countries try to ban it and other ones? So we're kind of going through a process of seeing how hard it is, right? So the longer it goes, the more benefits from the Lindy effect. And it also reaches a higher adoption, so it can kind of slow down its volatility over time. And if it becomes a multi-trillion-dollar asset and then it's been around for 20 years, that gets more interesting, right? So I think over time, Bitcoin can become big enough if it continues to show that it's hard enough, and that it's sturdy enough to support that kind of capital. I think in the meantime, gold is kind of the present option that central banks have. They can they could drive the size of that market up by 50% or 100% in a pretty short period of time. And then Bitcoin has to get multiples bigger in order to kind of serve a similar role.